Alright guys, welcome back. We got the Swiss Japanese yen under the microscope. As you know, we've been very heavily involved lately with the Swiss Jap. It's been quite a ride. I mean, this is a roller coaster. What we had here is really crazy volatility, up and down, up and down. We tried not to fall short to those to those short-term moves back and forth. We're trying to look at the big picture. That's why we like to work usually. We like to look at the weekly chart mostly, and we like to judge the technical situation by the weekly chart. So in this case, guys, we're looking at mostly 112.27. That's the big key level. That's the main point of reference. But we're also looking at 112.79. And we're looking at 111.78, right? So here's what happened over the last few days with regards to this position here on the Swiss Jap. We had some partial success already, right? Because we had the position was bigger, right? And we were hunting 112.79. That was about a week ago. We hit that level. But we stayed in. We didn't close that position. We just took some profit. We took 50% actually off the table at that point. And we kept the position alive. We survived that downside correction where the stop loss was much lower back then. And now price began to come back up, right? Now, the idea was to increase the position even further if price was gonna break 112.27, which it didn't, right? So that's a little bit concerning to us, guys. I have to say. Yesterday, price was on the up. It was big time on the upside, right? It was drilling upwards, and we felt that it was going to break 112.79. So we were really happy about it, and we were basically fully prepared to pull the trigger and increase the position. Now, all we needed to see is either a break above 112.27, but even 112.79. Either way, that was good enough for us to increase the position here, to reinforce this position. That did not happen. Price actually bounced off both of these key levels. Take a look how it ended up that day yesterday. So that was not a very good sign, right? Obviously, we did not. We didn't reinforce that position. We kept it its original size. However, today, when we look at today, today, right? Even today shows you that that 112.27 is a stubborn resistance level. It's a powerful resistance level. It's pushing against price action in a rather successful way so far. So that obviously that lights a bit of a red light, for us right here. It's a bit of a warning sign. We might decide to close this position, but let me show you what needs to happen for us to actually pull out, right? So once again, I'm going to take you to the weekly chart. If it's going to look like this, by the way, that's a good sign. Now I'm talking about the end of the day, right? Because today's Friday, the last day of the trading week. By the end of the day, we're going to have that weekly closing bar. If it's going to look like this, above 112.27, that's actually a good sign, right? But as you can see, the battle is going down right now as we speak. It's going down right now. You can see how it flirts. It bounces off that level back and forth. But if it's going to stay above, we feel that it will, then that's a good sign. And then we'll just continue to carry on, business as usual. Now, on the other hand, if price will make it and close that wick below 112.27, that's actually going to be a bit of a, indication that price could push much lower. And in that case, we would like to close that trade and look for opportunity somewhere else. Fair enough? That's about that, guys. 111.15. That's where our new modified stop loss level placement is. And it's going to be super interesting to see how this move is going to play out. So yeah, we'll be back to follow. That's about it for today, guys. Enjoy the rest of your day. We'll see you next Monday. Take care.